Today, the markets are going to replay yesterday's scenario. The Fed Reserve's agenda for monetary policy is still putting pressure on the US dollar. The dollar, in turn, is a losing stream against its rivals in most major peers. The overall sentiment on the greenback is bearish. The high chance of a Republican candidate, Donald Trump, winning the US presidential election is offset by other factors. The bearish factor for the greenback is the first rate cut by the Fed Reserve expected in September. Therefore, today the US dollar is still sizing the moment, giving priority to fresh economic data than to future policy decisions of the Fed Reserve. Moreover, the US dollar index is even trying to stay afloat, trading in the intraday corridor of 103.70 to 104.30. The reason behind the greenback's stability is the US retail sales data published yesterday. They slowed from 2.6% to 2.3% on a year in June. Analysts had projected a steeper decline to 2.1%. To sum up, the actual dynamic was positive and propped up the US dollar, preventing it from weakening. Perhaps the US dollar will receive a fresh impetus today after the publication of industrial production data in the United States. Industrial output is expected to rebound from 0.1 to 0.4% in annual terms in June. On early Wednesday, the US dollar tumbled amid comments from a Fed Reserve Bank of New York President John Williams. The policymaker said that lowering interest rates in the United States would be the right move. At the same time, the US Central Bank intends to maintain the funds rate at a level that will continue to restrain economic activity in the country. So, the euro-dollar pair responded to his speech with growth. In addition, the single European currency was supported by the British pound, which strengthened precisely due to rising domestic inflation. However, the main reason for the euro's rally was the soft US dollar. As a result, on Wednesday, the euro almost tested the resistance area of 1.0945 on the daily chart. All in all, the euro settled and broke upward resistance at 1.09 below, and this indicates bullish sentiment among traders. The euro did not have a downward correction and left the range of 1.0895 to 1.0905. It means that traders are opening more long positions on the euro-dollar pair. The instrument may extend its growth and head towards the psychological level of 1.10. As an alternative scenario, we can consider the price returning to 1.09 below and forming a trading range along this level. Oil also rushed to take advantage of the dollar's weakness. Crude oil is trading very volatile today. Moreover, even despite the contraction in the US oil inventories, the Brent price dropped below $84 per barrel. The catalyst in China's economy, has been slowing down its economic growth, and this raises concerns about energy demand. However, the oil market may develop the opposite trend as US oil inventories have been shrinking for the third week in a row. And this is confirmed by data from the US Department of Energy today. Oil prices will most likely rebound to $85 per barrel. From a technical point of view, if the price settles below 84, this could lead to a further decline to 81 or even 80. The Russian ruble formally remains stable, trading around $88 per dollar. Interestingly, the US dollar has not dropped below this level over the past couple of days, and there were even attempts to grow to the area of 89 rubles. However, the impact of the tax period in Russia will gradually increase. Thus, despite the sharp relaxation of requirements for the mandatory sale of export revenues, the ruble is set to gain ground. However, this will happen smoothly. Most likely this week, the US dollar will fall slightly below 88 rubles. Gold prices today set a new record high and briefly tested the level of $2,480 per troy ounce. And this is how the market reacted to the words of Donald Trump, who gave lukewarm comments about the situation with Taiwan. In his interview, he stated that the island should pay the US for its protection from China. By the way, Trump's choice of a trade hawks James David Vance as his vice presidential candidate has already made it clear to markets that China is destined to play an important role in his foreign policy plans. The US is currently China's main trading partner, so such statements by Donald Trump should clearly please Beijing. Now China is hosting another plenum of the Communist Party. In the meantime, economic reports cannot please China's leaders. At the same time, there are more slogans and assurances of economic support in the actions of the Chinese government than any significant steps in this direction. Besides, China is trying to gain a foothold in the global financial arena through cooperation between the BRICS countries. Wherever the alliance intends to use not the dollar but something else in a mutual settlement. But what? For example, India, the third in his abbreviation, is developing its economy very powerfully, importing a lot of commodities and oil. However, according to domestic laws, the Indian rupee cannot be taken outside its borders. Perhaps gold could become such an equivalent. Thank you for watching and see you online tomorrow.